Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, December 16th, 5:37 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Market state still in an uptrend. A couple of problems with the uptrend. We've been alluding to them in the videos, and we'll touch more on it as we progress through this video. The problem being that there is a massive divergence taking place between growth stocks, leading stocks, and value stocks. And money is flowing fast and furiously into the big eight type stocks, except for NVIDIA. That's showing lots of relative weakness as other big semiconductors, two in particular, Marvell and Broadcom, have shown big money flows into them and big price gains, most likely at the expense of NVIDIA. Once everybody owns it, the only the only spot to go from that is down, especially if what appears to be a better opportunity comes to the fore. And I think that's what we're seeing with Marvell and AVGO. Also, we're seeing short-term weakness on four of the six major indexes that we track: the Dow, mid caps, small caps, and equal weight S&P 500 below their 21-day moving average. We keep the arrow green because we weight the combined market cap S&P and NASDAQ 100 above 50%. So that'll stay there until one of those indexes breaks the 21. Also had a break of the 50-day moving average on the equal weight S&P 500 today. And again, that just gets to the divergence we're seeing between growth and value. So we still got the four green arrows, but there is weakness under the hood. So really the question is rotation going to take place? And some of these weak value names, I mean, I'm talking like we're setting records for consecutive down days in value stocks. And while the market goes higher, the S&P and the NASDAQ go higher, we're setting records for divergence of number of names down being greater than number of names up. And it's just not what you would expect when you've got the leading index at all-time highs or near all-time highs. So bottom line, we are riding the wave. Our market leaders haven't been affected by this. Obviously, one of the big advantages of us focusing on growth stocks in market uptrends. Can slim type names are holding up very well. And the rotation that's taking place, as I said, with the market cap weighted S&P 500, money coming out of healthcare primarily, and also some energy weak also, and some of the other value type indexes piling into seven of the big eight. So the yellow sub arrow showing on short term, that's our 21-day moving average that we use to establish a short term trend. Medium term 50-day moving average still green except for equal weight S&P. Long term, and the market never gets into serious trouble unless the S&P 500 breaks below its 200-day moving average. And long term, we're looking just fine. So what happened today? More of the same, and kind of what I just alluded to. Growth leaders continue to crush value. Here are the numbers on the day. Our 21-21 list rocking 16 up, 5 down, up an average of 2.3%. The big eight also rocking, with exception of NVIDIA, up 1.7%. The RG8 also had a good day and led by FFTY, which is definitely the one that we focus on, and ARK as well, as Tesla continues to just be on a rampage higher. S&P and equal weight diverging. NASDAQ 100 led, Global 60/40 slightly positive, and we continue to take advantage of the run up in leading names and the S&P 500 tech names. Our flagship GROTECTION portfolio up over 1%. So let's get to the charts, and we'll start with the S&P 500, and this is a very nice looking 6-day consolidation bull flag that we're looking at here. Tight, tight, tight. And that looks great. Now, you certainly wouldn't expect it to see it if you knew that half of the S&P 500 look like this. And this is the value half breaking the 21, breaking the 50. Massive relative weakness over the last 2+ weeks. Just nothing but selling on growth names. And here was the gap up on the election below those levels. Now look at SPYG, the growth half, complete opposite, uh, trending higher 2+ weeks very strongly. This basically looks like the NASDAQ 100 because the top at the top of the S&P 500 is very close to what's at the top of the NASDAQ 100. That just looks fantastic, and that's what's keeping the index afloat. Let's look at RSP. Obviously, a combination of the both and equal weighted, breaking the 21, breaking the 50. Massive relative weakness over the last 2+ weeks relative to the S&P market cap weighted. Let's go to the Dow. Dow is a value type index, and that looks like what value type indexes have been acting like. Massive relative weakness. Relative weakness. Here's the price the last time the relative strength line was down here. So we've broken that well ahead of what price has done. You don't want to ever see relative weakness breaking to lower lows before price does. That's not a good sign. Let's go to mid caps. The S&P 400 weakness as well. This chart tends to look a lot like the RSP chart. Obvious relative weakness there as well. The difference is it's only broken the 21, not broken the 50-day moving average. Let's go to the Russell 2000 small caps, breaking the 21. 21 has rolled over, still above the 50-day moving average. So we continue to see more of the same. The party will end at some point. It's again, ride the wave higher, raise your stops. That's all we've been doing is riding these higher and raising our stops, and that just allows the gains to accumulate. And when the market changes its mind, the market will take us out of the names that we own that we're riding higher. Okay, those are the major indexes. Let's go to inter-asset correlation, and we'll start with the VIX. Now, the VIX, even with the S&P up, the VIX up 3.16%. There's a lot of weirdness going on between these drones taking over the skies of New Jersey and uh, half of the country despises the guy that's going to get inaugurated on January 20th. Will they try to somehow keep him out? Are the drones tied to that? Uh, a lot of questions, and also with the massive divergence between growth and value that we're seeing, it's not a surprise to see a little bit of tick up in the VIX. A lot of the secondary indicators are deteriorating to the point that they're ready for a snapback in the other direction, which would be healthy for the market. That snapback would probably mean that money would come out of some of these growth names that have been bid higher. Maybe we'll see that not till the new year when people decide that why would I want to sell these big winners the last 2 weeks when I can delay the taxes for until April of 2026. So you very often see the first week of the year that the big winners get sold, or where some profit taking takes place in those names. We're of course on guard for that. So that's the VIX up on the day. You normally don't see that, but if you look at the VIX the way you're looking at the RSP, it's completely in line instead of looking at the VIX the way we do against the market cap weighted S&P 500. So from the VIX, let's go to the dollar. And the dollar started strong on the day, faded as the day went along. That's good. If you look at UUP, this is the ETF. It actually filled this gap. So abandoned baby no more. But strengthened the dollar over the past 2 weeks, a little bit of give back today. We certainly want to see continued weakness in the dollar. as that is strong dollar is a headwind for stocks. So from the dollar, we'll go to precious metals. Gold stocks breaking below the 50-day on Friday and the 21-day, and an inside day up, but still below those moving averages. GDX gold stocks, terrible, bouncing or holding for now at the 200-day moving average. From a technical setup standpoint, this would have been a great short using the Dust ETF. That is at a failure into the 50 declining 50-day moving average is a classic short setup. SLV silver also weak, tight range today. Bitcoin gapping up and faded a bit as the day went along, but new all-time highs up 4% on the day, showing extreme strength. Just we continue to just raise our stop on this day by day as well. The trend is your friend till the bend at the end. So from Bitcoin to bonds, BND, the broad bond index, just barely positive today, an inside day as well on that. TLT, the long bond, up 0.3%, holding near these recent lows that we set a couple of weeks back, 5, 6 weeks back. So that's TLT, and if the price of the bonds is hovering near lows, that's going to put the yield near highs, as you can see, into this range where we consolidated 5 to 6 weeks ago after a strong bounce up in yields, possibly a pause here, at least for one day. We did see a pause, and we want to see continued weakness in the rates. Jerome Powell doesn't control these longer term 10-year and 30-year rates. The Fed funds is short term. The 2-year tends to track what the Fed funds are going to do, but they don't have any control over these longer term rates. So rate spiking, you would expect some market weakness, but with the money flowing into the big tech names, that's not what we're seeing on the S&P and the NASDAQ 100. But of course, that is what we're seeing on the equal weight S&P, the RSP, as we've been through that over and over again. All right, let's go to the tail of the tape. A couple of changes here. Improvement in the stochastic indexes with the NASDAQ 100 and the S&P. RG8 also improvement, FFTY and ARK. NASI hooked down last week. It got near overbought. Now it's headed down toward oversold. Dollar strength continues. Longer term bond strength continues from a yield standpoint. Percent versus the 5-day. This has been consolidating tightly down in the 20s and the 30s for longer than is evident on the chart going back over a year. So something's got to give here. This is the percent of stocks on the S&P 500 below the 5-day moving average, and it's been in the 20s and the 30s for over 2 weeks. So that's coiling for a spike higher. That's the arrow's pointing down, but the arrow is green, which means lower is good. While you consolidate, you wait for it to pop higher then, and look for when it gets up near the 80s and 90s. That's normally a topping signal. So these are some of the key secondary indicators that we keep an eye on. News Wednesday, FOMC, the Fed. There's a 95% chance of a quarter-point basis cut. That's widely expected. What Jerome Powell says in his statement, the Fed statement, his statement, and the Q&A will often dictates what happens from there. But there are additional 2 to 3 cuts priced in throughout 2025, and we did see some weak economic data this morning supporting that. Keys for today: that range on the S&P 500, we remain in at 6,100, clear resistance. Growth leader follow through. Yeah, we've been commenting on this for a while. We're going to change these keys slightly for tomorrow. Day count, 6-day consolidation, very nice bull flag. Will it break out, or very likely? I think we don't ever try to predict, but the growth side of the boat is getting extremely full, and the value side of the boat is there's basically nobody left on it. Back above the 8-day moving average, and it hooked up. So day one there, 20 days above the 21-day moving average. Sectors: semiconductor, software, cybersecurity, XLK and Y, two of the three tech sectors, biotech, and the big tech names. That's what outperformed today to the downside. Oils, staples, utilities, and healthcare. Again, value names taking a beating. The only change we made to the portfolio was to do some offensive selling on Tesla as it's got 4 ATR extended from its 21-day moving average. That's just a rule that we have in here. We always take a piece off when things get ridiculously extended to the upside, look to add it back at a more reasonable level. That brought our adjusted beta down to 1.55. So 50% more risk than if you had a full portfolio of just S&P 500. And to the downside, 7.67% to the downside. This is if all of our stops and all of our holdings would get taken out. This is what the drawdown would be off of the top. But the bottom line, big tech and growth leaders continue to crush value names. So the keys we're going to watch tomorrow. Can the S&P break out of this bull flag? That would mean a sustained move above that 6,100 resistance level. And we'll keep an eye on this growth versus value divergence. Those are pretty important. Like I said, setting records. And when you set records, at some point that stops and you head in the other direction. All right, let's go to the charts and we'll go to the 21 over 21, 3 to 4 new names. Let's just go through everything. First, the holdings in the portfolio. So Vertiv, some relative weakness recently, and it closed just a hair below the 21-day moving average. We're going to keep it on since we own it. A-Lab continues, got a little bit extended and reversed off of that today. There's Bitcoin with the gap up. There's Reddit. Got extended last week, pulled back, bounced at the 8 EMA, renewed strength today. Dutch Brothers, we sold a little bit on weakness. That last buy was underwater. That lit a fire under it, obviously. I'm joking about that, but it did. Regaining the 8-day moving average today. There's Tesla. It's above 470 after hours. This thing can just take off to the upside, and sometimes there's no stopping it. If you look at the weekly, it's gone on massive runs before. Maybe the monthly's better. This was the big one back in 2020, interrupted by COVID, but a massive run from 20 to 3 or 400 before it split, and that's just amazing. So we continue to ride a piece of that higher. We took profits around at 460 with it being extended 4 ATR, and it's up another $11 from there. Snow holding tight, had some weakness last week. Credo continues to be a very strong stock. Again, that data center theme. Google higher high after the big move higher last week. Now the ones that we don't own. Deckers just continues to ride the 8 EMA higher. CLS got a big bounce on Friday. Tight consolidation here near the 100 level. Natural resistance at the round number. Team forming a nice flag. Twilio riding the 8 higher. Palantir, a little bit of a shakeout today under the 8 and then reclaimed it. Bloom Energy, we got shaken out on this below the 8 last week, but buyers have come in since then. XPO, nice tight action for about 5 weeks now. That is one heck of a tight flat base. Rubrik, looking to get into this, hasn't pulled back to the 8 yet, showing extreme strength. Now, Broadcom, two back-to-back massive days after their earnings report, and you always like to see that second day follow through. That means that institutions are clamoring to get into this. We've just got to wait for some sort of a low-risk pullback. Marvell continues to show strength too since its earnings gap up and a perfect pullback to the 8 EMA and bounce. Added this week, AVGO and Marvell. Lemonade as well. Broke this down. Trend line closed at the low end of the range, but showed serious relative strength since its last earnings report. This is the first pullback to the 21-day moving average since that happened. And AppLovin, got very ahead of itself. Then it wasn't added to the S&P 500 and had a big sell-off last Monday, pulled back and held right where we needed it to at the 21-day moving average. So another one with its first visit to the 21-day moving average since its big move higher on its earnings gap. And that is your 21 over 21 list for this week. And with that, I'm going to wrap it. As always, like to hear from you. The email's Donna@RevereAsset.com. Phone's 855 Real Wealth. If you're interested in becoming a client, and man, do we have a lot of people reaching out to us, and we're very grateful for it. My partner, Dan Stewart, can be reached at dan@revereasset.com. Reminder, our flagship portfolio is named GROTECTION, combination of the words growth and protection, because it has a dual mandate: grow assets during uptrends, protect them during downtrends. For example, the 2022 bear market, COVID, and the 2018 bear market. We just follow our rules to get the heck out of the way. Every 20% correction begins as a 5-6% correction. You break the shorter term moving averages, then eventually you'll break the 200-day moving average. And then when those start to roll over, that's when the fun begins. If you're a bear, you can make money in bear markets too. But um, our rules get us out of the way and let the market determine what to do. Then we look for buy signals for reentry. We're not perma bears here, but we're certainly not perma bulls either. Looking to wrap up some really nice gains that we've had since this rally started last November, with a big follow through day, and we've just ridden the wave ever since then. A couple of pullbacks along the way where we lightened up. That always happens. You never know if that pullback is going to be the end of the rally. So we've got rules for getting out, rules for getting back in. But again, nothing ever seriously is damaging to the market occurs as long as you stay above this big black line. That's the 200-day or 40-week moving average. Every bear market in history occurs below this line. Just because you get below that line doesn't mean you're going to have a bear market, but that's where the risk is. Risk picks up, and that normally coincides with something serious going on from a geopolitical standpoint or economic standpoint. Bear markets pretty much always have some sort of a catalyst that caused that. And that is it for Monday, December 16th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.